Welcome back. You're watching The Money Show with me, Kavita Thapliyal. Now, gold has been an integral part of Indian culture for centuries, making it a popular asset among Indian households. However, it is not just because of their beauty or status symbol that they are prized. It is also because gold can serve as collateral for a loan and making it a valuable resource during financial emergencies. So, how can an ordinary individual avail gold loan? What are the benefits and risks associated with a gold loan? Let's and all of this with Amit Kukreja, founder Amit Kukreja Advisory. Amit, good evening and welcome to the show. We are going to talk about gold loans, which are also treated as secured loans, and we can actually avail a gold loan in 30 minutes through any financial institution, be it a bank or NBFC?
Yeah, some of these are very fast in terms of issuing the money for a collateral. And these are fintech platforms, and somewhere the process is pretty cumbersome with all the required paperwork. So it depends upon where you're taking the loan from.
So, so let's talk about the rate of interest, the loan tenure, and the repayment strategy also, because a lot of these financial institutions are very flexible when it comes to paying off a gold loan. So what exactly gets into it? If we have to compare it with a personal loan, what could be the range of interest rates?
Yeah. So if you if you analyze what are the types of loans, then you will always find that any loan which is against a collateral will come to you at a cheaper rate of interest. Any loan which does not have a collateral, like a personal loan, will come to you as an expensive rate of interest. And anything which is coming to you as a borrowed money on a credit card will be the most expensive loan. So when it comes to loan against a collateral, it depends on what is the collateral. Is it a house? Is it an office? Is it any other form of real estate? Or is it gold? So the rates of interest for these collateral, they also vary depending upon what is the nature of the underlying asset. Is it an appreciating asset or a depreciating asset or a constant value asset? In case of financial assets also, you can get the loan. But coming to gold specifics, the rate of interest on the gold loans have been hovering in the range of 8 to 12, 13%, depending upon where you're taking the loan from. And they look at the quality of the asset. They also look at the form of the asset, whether it is physical, whether it is sovereign gold bond, which means the paper asset. What exactly is the nature of the asset? Is it the gold in the form of financial asset, for example, gold ETF? Is it gold in the form of paper asset, which is sovereign gold bond? Or is it gold in the form of real gold, 24 karat gold, which could be coins, which could be any other form or the shape? Or is it a gold jewelry? So it depends upon what is the underlying value of the asset, the nature of the asset, and the loan to value ratio, which is the percentage of money that can be lent to the borrower against that collateral.
All right. Now, what happens to a person who has a low credit score? Can they also avail a gold loan?
Subjective to the lending institution, Kavita. If the CIBIL score is very bad, the lending institution may choose not to give the loan to that person. If the CIBIL score is an average score, or if the CIBIL score is a very good score, then they may offer a different rate of interest to the borrower. So it depends upon what is your CIBIL score, which reflects what has been your payment history in the past for the borrowed amount that you have taken from the lending institutions, and accordingly the rates of interest are being offered.
So typically one can go for a short-term loan if that's the criteria. A gold loan is preferred than a personal loan.
So I would always say a loan against a collateral is preferred over a personal loan, because what personal loan does is, it first of all, it comes to you at a higher rate of interest. Second of all, it might impact your CIBIL score adversely, more adversely than the score when you had taken a loan against a collateral. And my suggestion is, why borrow money if you can structure your financial plan in a manner where you have a contingency fund, we have the whole layers of financial planning established, then either do the asset allocation, sell your asset and have the money, rather than giving away the asset as a collateral. Because I know gold, people get attached to in our country. It has its own ornamental value attached to it, and some cultural value attached to it as well.
All right, so that was all about gold loan, but then let's move on and let's have our viewers online with us. Do I have All right, so this is an email query from Mr. Kulkarni from Goa, and he says that he has 3 SIPs going on in PGIM Mid Cap, Canara Robeco Large Cap, Nippon Small Cap, and he wants to hold this for 20 years from now, and the accumulated, the corpus that he wants to accumulate is 10 crores for his retirement. He wants you to analyze his schemes, and he's 35 years old.
Yeah. So my answer to Mr. Kulkarni from Goa is that whatever I'm going to state now is purely for educational purposes. We have got a new code from our regulator, so I have to be very cautious with respect to what I'm sharing with the audience on a national TV. So, Mr. Kulkarni, you need an SIP of 95,000 rupees a month to accumulate 10 crores in 20 years. From a pure academic perspective, if the money is growing at 11%, 12%, 13%, or 14% respectively, you are likely to accumulate 7.75 crores, 8.75 crores, 9.85 crores, or about 11 crores. So from an academic perspective, at different rates of return, you are likely to accumulate 10 plus crores within 20 years if the rate of growth, the rate of interest is 12 plus percent. The schemes that you have are really good, but the amount that you are investing through SIP is only 10,000. So you have a way to go before you achieve that target. So either increase your SIP amount and come close to 90,000 a month, or reduce your target accumulation corpus.
All right, so that's the answer for Mr. Kulkarni. And with that, thank you so much, Amit, for being on the show and helping our
Pleasure.
viewers with their financial portfolio queries. But we